Hello and good morning to all. My name is Stephen Chia. I'll be your moderator for this session. Welcome to the Big Issue Debate. We've got a great topic for this morning's discussion. And just before we get to that, we've got everything lined up for you. And in fact, maybe we'll put it up on screen as well. We'll share the topic with you before I welcome and introduce my distinguished panel of guests this morning. We are talking about disruptive innovations transforming the financial services landscape. Are we simply in the middle of a new technology cycle or not? Well, let me welcome my speakers for this morning. Can I ask you all to come to the podium? We've put this a bit like the US presidential debate, so you can, we'll see how that works out. But let me introduce you to them. We have Sanook Wishwanathan. He is the Chief Administration Officer for the Corporate and Investment Bank at JP Morgan. Eric Pradier, Vice President and General Manager Consulting EMEA for Hewlett-Packard Enterprise, and Eileen Burbidge, Partner at Passion Capital and HM Treasury Special Envoy for FinTech. So thank you all for joining us. We will hear from them very shortly, but first we thought we'd get a sense of you folks in the room on the topic that we have this morning. By now you might be quite familiar with these devices we have here, so pick it up and we get you to vote on our topic for this morning, just to see what the sentiment is in the room right now. Of course, the question we're asking you is, are disruptive innovations transforming the financial services? Are we in the midst of a fundamental technology shift, or is this merely another technology cycle? You can choose either one or two. Are we in a shift or in a cycle? We'll give you about 10 seconds to place your vote, and what we'll do is at the end of the discussion this morning, we'll again do this similar vote, just to get a sense of what people are feeling in the room. So your time begins now. Please vote. And let's take a look at the results. 63% feel that we are in a fundamental technology shift. 37% feel this is just another cycle. Okay. Well, our speakers have a sense of what the room is feeling right now, and we're going to give them a chance. We'll hear from each of them for a few minutes, and then we will have a question and answer session. So I think we'll let Sanook begin first. Eileen and Eric, you can have a seat. And Sanook, please.
Thanks, everybody, for being here, and thank you for the organizers for this generous invitation. It's a real pleasure to be talking to you this morning about this topic, which is near and dear to my heart. I live in London, near Imperial College, and in April, they hosted a robotics fair for kids. So I took my 6-year-old girl, and we went over to see what was going on. And I have to say, I was just awestruck by what was going on there. There were hardware robots, there were artificial intelligence programs, the room was filled with drones flying around, and the kids were just having so much fun and really enthused about what they were up to. And it just struck me that we're in the middle of something tremendous here. The same technologies that those kids were playing with are indeed affecting what we're doing every day. And I do believe there is a disruption at work here. I don't quite like the terminology of technology shift versus cycle, to be honest. I actually want to coin a third word here called technology acceleration. And what I think is really at work here is technology acceleration. Now, why is that happening now? Why now? Because we've seen tremendous leaps and bounds technology developments over the last several decades, but why now in particular? I think there are three forces at work that are going at the same time. They're operating at the same time to make a big difference to the way we operate in banks and other financial services companies. The first is really people's behaviors. We're all now used to working with supercomputers in our hands. We're really used to the apps. We're used to getting everything at our fingertips. We are comfortable living in the sharing economy, hailing rides when we want, living in each other's apartments. And it's fundamentally changing the way people expect to do business at work. Time and time again, I hear from our own employees, why can't I have at work what I get at home, what I'm doing in my personal life? So there's a big shift in behaviors and a thirst for doing things differently. The second, which is quite interesting, and really, I think as a bank and being somebody who's invested in this space for a long time, I really welcome this, is just the explosion in new capital that has come into the space. 15 years ago, FinTechs were still around. A lot of startups were still being formed, but there wasn't as much investment going into it. I remember JP Morgan was one of the few institutions that was investing systematically through a strategic investment program. But look now, 15 years later, there's just been an incredible explosion in activity. Venture capitalists coming in, angel investors coming in, a lot of corporate venture funds coming in. And that's fantastic, because fundamentally you need capital with a different risk appetite to foster innovation, to try different things. A lot of them may fail, but when those one or two things do come through that are transformational, it's going to change all of our lives in this room. So that's exciting. And the third factor, which is very clear and all of us feel it every day, is that the banks need to do something different. We are under a lot of pressure on margins, on capital, liquidity, and we need to look for new ways to find growth and efficiency. It's not a nice to do, it's a must do. So that's creating this, new behaviors, right? People's behaviors, new capital, and a willingness to try something new. So these three things, I think, are really making a huge difference in how we're putting these technologies to work. And I really believe, because of them, you will see a true disruption in financial services. So that brings me back to the main topic, which is, what are these technologies and how are we applying them to change our landscape here? So I'll talk about 5 technologies that we are deploying and putting a lot of our energy in at JP Morgan. Not that these are the only 5, but I do believe these 5 have tremendous potential for financial services. And I have to say, in each of these 5 technologies, the way we are working through them, which I think will be quite interesting to hear Eric and Eileen's take on as well, is through a combination of assets, a combination of resources, some of which is internal, a lot of which is with external partners, both large companies as well as startups. And I'll talk through it in a little bit of detail. So let me start with the first. It's big data. It's hard to, I heard someone said, that data is the new oil in the earlier part of the conference. And that's, it's just telling. Big data is everywhere. At JP Morgan, we have over 200 petabytes of data. That's a lot of data. Just in the last 12 months, we've literally doubled our big data nodes in the company. And that's just the start. I bet this is happening at all of your institutions all around the world. Now, the important thing about data is not how much data there is or how we process it, but what we do with it. And we're finding really early signs, early glimmers of really exciting use cases of how we're putting this data to work. One example that I can talk to is, lately, we've been using insights from our data, from macro data, from what we see when we do work with various companies, to really be able to predict and help our bankers, our equity capital markets bankers, have a better sense of targets for equity offerings. So the machines are able to come up with an early indicator of, here are the top 10 lists of companies you should be calling or really be thinking about. Now, what this is doing to the bankers is it's just increasing their leverage and increasing their time to market with their ideas. That's just one example. There are many, many more. Another area of technology that we're really excited about, we call it robotics. It's really not hardware robots that we would all immediately relate to, like R2-D2 running on the trading floor, right? It's not that. But what I'm talking about here is software bots. So the kinds of bots that you chat with on your Facebook Messenger or when you're trying to get your utilities bill paid. So software bots. We think there's huge applicability of software bots across the banking system, financial services writ large. We've applied that in a number of spaces. We've found it very, very helpful in generating a lot of automated, repetitive tasks, just taking it off the humans and doing it in a systematic way in the background. And I have to tell you, the pilots that we've run this year are showing us that the bots run 100% of the time, all day, every day, right? It's very reliable if you program them correctly. So we are applying it in sales. We are applying it in research. We are looking at applying it in various parts of operations. So we see a lot of applicability to this technology. And at the moment, the kinds of bots that we're working with are what I would call process automation bots, right? We're just taking an existing process, and that's repetitive, manual, and tedious. And frankly, our employees love it when the bots take it off their backs. So that's the kind of stuff we're doing, but that's just the start. In the future, there will be more intelligence that you can add to that, and you'll have more and more machine learning built bots that help you interact in a more intelligent way with your clients, with your customers, with employees, everybody. The third technology I just wanted to describe is APIs. I bet a lot of you have heard about APIs in the last few days, application programming interfaces. Why are these so important? I find APIs really important because it changes the way we do business together. APIs are going to allow us to interact with our clients and our partners in new ways. It allows us to interact in an in-depth way where we can exchange data, we can exchange code, we can work off each other's platforms, and we are not dependent on logging in into a web portal or logging in into a mobile app in order to interact with each other. This has huge applicability. I think what I find as early applications of this is simply allowing us to work with startups in a different way. So we are able to expose our data through APIs. Startups with ideas are able to plug into them and just build their own applications on top of it, and it becomes part of the ecosystem. We've had the same discussions with some of our key clients. They are beginning to build applications using our APIs, and we have long-term partnerships that are just evolving as a part of this. That brings me to the fourth and probably the most important change that is underway, which is the cloud. The cloud is ubiquitous. It's all around us, and it's going to really make a tremendous change to everything we do. So what is the cloud? I'm talking here about both compute and storage being elastic, right? Being able to use the likes of the big cloud providers externally and internally, our own clouds, to variabilize an infrastructure that has traditionally been incredibly hard to build, very, very high barriers to entry. So this is changing the dynamics of who can actually be in business. And again, we're not viewing this so much as a threat, as much as an opportunity to change the dynamic of client service. Because part of the reason we are all disgruntled a little bit with the service that we get from banks is because it takes a long time to build out new products and services. And a lot of those reasons are dependent on the fact that we have this intractable fixed infrastructure cost, and it takes us time to move from one platform to another. All of this is going to change because you can now fire up a new computation literally in 30 seconds. You can fire up 1,000 servers in literally 30 seconds and run your computations, and you could be 3 people in a garage doing it. This is already making a difference. We see the changes in market structure in certain areas like foreign exchange trading. We now have very young startups, literally already in the top 10 league tables on trading, as an example. Again, in the world of payments, we find many, many players who are able to interoperate with our technology using APIs and working on the cloud. So huge changes coming up. I think it's really exciting. I would be remiss if I didn't mention this last technology. I bet everybody is blockchained out in the last few days, but it does matter. So distributed ledgers are going to make a big difference to our industry. The way we are operating with distributed ledgers is to use a combination of strategies. We're working with some big partners on some very specific pilots. We're also seeding investments in a number of startups. And we have our own internal center of excellence. Part of the reason we have an internal center of excellence is to make sure that we really know what we're talking about. Right? I think this is a space where it's easy to say a lot of stuff without really understanding the power of the technology. So we have a group of engineers that are working on building various protocols and improving the standards and security standards and the like. And I have to put in a plug here for a new platform that we went live with on Thursday. It's called Quorum Chain, and it's something that we've committed into the Hyperledger Foundation that we will be open sourcing. Now, why is that? I think this is an important thing to mention. We believe that when it comes to technologies like the distributed ledger, its power really comes from everybody adopting it and using it. And there is huge power to standard setting and having the right sets of protocols. In this case, we think the best approach to achieve that is to have a foundation and is to actively contribute whatever we are all building in our respective companies. And that's going to force us all to get better. That's going to force the standards to converge. And ultimately, it's going to drive real value creation. So those are the 5 technologies that we are most excited about. We're putting in a lot of effort into it. And hopefully, I've given you some specific examples of how we are putting it to work. What's interesting about all of this is it is not just about introducing a specific technology into one specific process, but it's about how we create an ecosystem where people fundamentally want to do things differently. So just in the last year alone, myself and the team that I have that looks at this space, we've met over 150 startups in depth. Right? I think this takes time, this takes commitment, it takes resources. But it's been rewarding because not all of the 150 has led to investments or interactions further downstream, but it's definitely exposed our own minds and brains to what the possibilities are. And it's led to a number of different engagements as well. I want to spend the last couple of minutes just taking this conversation to another level, which is, as excited as I am about these technologies and the changes that each of them will individually and collectively bring, I'm much more excited about something that's far bigger and that's really, really exciting to watch. And that's the cultural change in the organization. What I see now when I talk about new technologies, when there is a discussion in product development about offering a new thing to a client, the discussion has moved on from, oh, that's not the way we do business in JP Morgan, oh, that's too hard to achieve, it's never going to happen, to a discussion which is more around, that sounds interesting. I don't think I know enough about what you're saying, but I'm willing to think more about it. Or I really want to know more. Now, how are we going to balance this new thing with all the stuff that we've already committed to delivering to our clients? So the dialogue is totally different. And I think that's, in itself, a huge change. Culturally, I think it's certainly happening in our bank. We think it's happening across the industry. And when that happens, I think the innovation that's going to come out of large enterprises is going to dwarf the innovation that's going to happen outside. It's just going to be a huge wave of innovation that's going to be fundamentally value-creating for clients. In addition to that, the other thing that I'm noticing is the roles and responsibilities and the hard silos that exist between the front office, the middle office, the back office. These terminologies are just disappearing. I've had numerous interactions in the last couple of years where people don't really care about where they come from in the organization. They're showing up to just serve the client. I think just look at what's happened even these last 4 days here at Sibos. At least when I talk to everybody here from JP Morgan, it's clear that you've spent a lot of time talking about cash management, liquidity, custody, loans, et cetera. But it seems like the underlying theme that probably has been dominating the conversation is technology. And technology historically wasn't seen as the business activity, but it is now. And that's exciting to me as well, because for too long, I think we've been in an industry where the silos have been quite strong, and collaboration is almost like a Herculean act, right? It takes a lot of effort to pull it together. But the fact that it's beginning to happen now makes it really exciting. And last, which is perhaps a bit futuristic, but I'm seeing early signs of this, is that the boundaries of what happens within a bank and what happens outside are also shifting. It's facilitated by APIs, the cloud, the distributed ledgers, et cetera. But it's really interesting to see that when it comes to delivering a service to a client, we are beginning to become more and more agnostic as to whether we are manufacturing and distributing it, or are we just sourcing it from someone else who's a better provider of it. And the boundaries of who's building it and who is distributing it and how it all comes together is really moving at the moment. And that's exciting for an industry, again, where a lot of players have very different skills and very different assets and very different starting points. And when that comes together, I think we're going to see some really exciting outcomes for the clients. So to wrap up, I'd say huge cultural change, a lot of exciting shifts in the way we think about ourselves and how we do work. And frankly, really shifting boundaries of who's doing what. All of this sounds like, gosh, that's a lot of uncertainty. How are we going to deal with it? I think the best way, and this is what I say to our teams internally, is yes, we can stand by and watch what the future holds. That's interesting in itself. But it's even more fun to be able to shape the future. So that's what we are trying to do. Thank you, Steve.
Thank you. Thank you, Sano. I think you've indeed given us quite a bit to think about. We'll have some questions for you later on, but time now for us to hear from Eric.
Thank you, Stephen. Good morning to all of you. I've been 30 years in this industry and combining IT and telecommunication. And the point of view I have, as well as the point of view of the company I'm representing here, is that we are not talking about a cycle. We are talking about a shift. We are talking about a disruption. I've been used for many years to have businesses explaining your technology enables us. Sometimes they go a little further and say your technology accelerates us. And personally, I absolutely consider that the technologies we are talking about, the digitalization, disrupts the businesses. Because back to what Sanook was saying, the key impact is to change the behaviors. Is to make that, we are talking now about generations related to technology. We're talking about Gen X, Gen Y, and so on, and where the silos we are creating are related to these technologies. So when behaviors are changing, it means that we have a big, big disruption, and that's our very, very strong message. Why? First thing, we are definitely talking about a window, and that's a window. It's not forever. It's not the end of the history. It's a window where all the technology cycles are at a peak in terms of innovation. Like you have the climate, it's made of a lot of cycles and obey cycles, but at the time, these different cycles are, I would say, concentrating on the fact that they're all at a peak, and that creates a total disruption. We are talking about telecommunication, and think about the cycle of telecommunication, the move from what was 2G to 3G to 4G to 5G on its own cycle, but that's a peak at the moment. Look at computing technologies, look at storage technologies, all the points you were talking about, all that is at a peak, and when you combine all that, you have a window where you have a huge disruption, because at the end of the street, communicating, computing, acquiring data, analyzing data can be done instantly at any part, any place you're in. The second thing I think which is very important is that we are a kind of fantastic moment, and again, I'm referring to 30 years, a very exciting moment, where you have a very large ecosystem and a very large innovative ecosystem, which is focused on digitalization. Today, all the startups, or most of the startups which are created in the different focus, FinTech, telco, retail, and so on, all of them, which combine an incredible innovation, an incredible creativity, an incredible way to share knowledge and to build on the knowledge of the other ones, most of them are focused on digitalization. And so you have an ecosystem which is absolutely amazing to create disruption, to create paradigm shifts. And then the last point, I think, which is important related to these technologies, and we have gone through all of that personally, is that what's happening at the moment is that the walls, the silos which are existing about your experience as a consumer, as a person, as an individual in your private life, and the experience you want to have as a worker, all these worlds are disappearing. We are all employers here, many of us. We are parents, and we are touching the fact that our employees want and have the appetite to work in the way they live, to have digital approaches like in their private life and so on. And so these key factors are creating a window. Again, as I said, it's not the end of the history. It's not the end of the history technology. It's a window where all that creates a lot of disruption, and where the only way for all the industries, and I'm transversal to industries, I'll come back a little on of course, on finance and so on, is that either we manage a paradigm shift with the right speed, or we'll be disrupted. Because people and enterprise will die. People and enterprise will try to adapt, but will be slow. And there will be new players, and they will be the one who have focused all their energy on the paradigm shift. As a technology company, again, in the technology, I'm not a technology freak. I'm the consulting guy, and so I'm the guy who is supposed to leverage his technology to transform and to help the customer to transform their business. There are key points in the how, which are very important for us. First, we think that the way to be the best prepared for that and to move ahead on that in order to be able to offer all these new approaches is to move to what we call an hybrid IT approach. Hybrid. In a world which has been based on the fact that everything was either square or a circle, we are talking about the strengths of hybrids. Like agronomes, genetician people, and so on are combining things in order to have a strong hybridization. Hybrid IT, which allows to support what was described before, the fact that at the end, compute and data must be everywhere where you need to have them. Sometimes it's absolutely on your very limited, secured premises and own databases. Sometimes it's a lot of social data, public data that you have to acquire. It's compute power, which needs to be very close to your customers. All that means to have an hybrid approach, which allows to enable that today, in several years from now, and to drive the adaptation of this overall ecosystem to the needs of your businesses. The second key point is to say there is a revolution around the person, around the individual. That's what we call the edge IT. That starts with a smartphone, that starts with the total evolution of the workplace, that goes on to what is IoT and so on, which is a total transformation, and again, which is a key point, because at the end, that's the behaviors Sanook was talking about. Because your behaviors, when you are workers, and more when you are just an individual at home, digitalization is a key element, a key component of your behaviors. And so your environment, to be able to use all these digital services and so on, has to totally change at the edge IT. And the third one, of course, is that we acquire more and more data. They are more and more relevant for the businesses, and so we need very strong analytics, very strong software, which allows to take a lot of information from these totally unstructured data, but which are now, I would say, can be acquired, can be retrieved, can be stored in absolutely amazing quantities. All that, second point, of course, we are talking on the fact that we are moving to assets which are totally digital. So, of course, it means a totally new ways to protect, because we have been used to protect physical assets. We have been used to secure, to lock physical assets, and here the assets are digital. It's not only data, but of course it's transaction with all what it means in terms of content, in terms of from who to who, in terms of frequency, and all this kind of thing. That's totally new models. And again, based on the fact that anyway, the risk is everywhere in the system, like for all of us in our body, and so that the protection and needs to be more and more about the fact that we protect an ecosystem that needs to protect itself for a very large part of it, which needs to be complemented with some very strong assessment, audits, and so on. But that's the second key point, which is how to protect digital assets. The third point I would like to stress is that innovation must be extremely pervasive. I'm surrounded with two friends here. If I summarize, a banker and a FinTech, I'm an IT guy, so I make simple models. But the pervasiveness here is essential. And we have been used to silos. We have been used to say innovation is future ideas, but I manage the reality of today. Again, all that is instant, and the pervasiveness is essential for innovation, and very important for all our words, very important for your words here. And then the point I would like to finish on, which is about regulation. And again, I'm an IT guy. I'm not specialized. I have teams working, of course, on finance, but also on telco and so on. And all the experience we are going through at the moment related to this digital disruption and so on, then when regulation, and the claim of regulation is a way to protect what does exist today, it's the wrong way. It potentially delays things, but it has a lot of negative impact, I would say. And I like to talk about Uber, because Uber is a clear illustration of all the points I just mentioned. What is Uber? Is first the point of view of the consumer, the point of view of somebody who needs a car at a given time, at a given place. And then that needs to be connected with somebody who will bring it somewhere else. Okay? By the way, it's a combination between two computers with a very real information. This computer, it gets something for the real economy. It's two virtual machines talking together, but the place I'm in is a real economy. I'm standing here. The place the car is another reality. And again, all the process is around combining that. And then when you go a little further, I'm coming from France, this regulation thing. First, you said, of course, the taxis are regulated. The taxi system is regulated. The other one is disruptive. We need to protect the regulation. And so you are out of the rule, you are out of it. Okay? Anyway, the push will be extremely strong. And why the push will be extremely strong? Because, of course, it brings a lot of value to the consumers we are. But more than that. Because when you start thinking as a consumer, you're saying, but by the way, what is the interest of this regulation? At the end of the street, it's a regulation which protects the taxi, which protects the public transformation, because as the taxis are regulated, the public transportation are regulated. All the public sector transformation are regulated. The price of a bus, the price of the underground and so on is regulated. And so in fact, all this regulation which is said it's for me, it's not for me. It's for the people who are managing public transportation to ensure that it's fully regulated. And at the end of the street, fully controlled from a pricing point of view. And so as a consumer, when I have the possibility to have the power with all these technologies, is it bringing value to me? It's not. And my last point is about that, which is to say, related to all what I'm talking about, all the disruption, the reasons for it, the key drivers at Hewlett-Packard Enterprise or system integrator and technology people we see around hybrid, around edge, around the protection of the assets, around the link between these two worlds and so on. And the last point is that we are also here, we think, to help our customers in all the areas I'm talking about to take full advantage from the digitalization and also to build the fact that they cannot protect and hide behind regulation. On the opposite, we are here to help them to say that at the end, the regulation needs to protect the real beneficial on that and not the system, and that again, through the technology, through the approaches and so on, we are the right partners for that. So that's a little, I would say, the perspective of an end-to-end IT organization like Hewlett-Packard Enterprise.
Thank you, Eric. Thank you very much. Last but not least, let's hear from Eileen.
Thank you very much, Stephen. And thank you, Sanoke and Eric, for having me here, joining you guys. I want to start actually by saying that it's a genuine privilege to be here and to talk about this topic with what is arguably a room of the best experts in this industry. So I really appreciate the chance to give you my point of view. Having said that, I generally appreciate being sort of the last on a panel because coming from sort of the startup world or trying to be the disruptor, I often listen to what other remarks are being made, and then I try and be all controversial and punchy and try and come up with really creative thoughts. That totally backfires when the two previous speakers are very eloquent, really organized, and say anything that I would have already said myself. So that means my remarks will be very short, but I could not agree more with what both Sanoke and Eric have already said. And as testament to my two different roles, so I am a venture capital investor during the day, but I also work with Treasury in the UK as the FinTech envoy, which means I assist them with outreach and with talking about what Treasury believes is happening in financial services, specifically with respect to technology. I was concerned a little bit that perhaps I'm spending too much time with politicians because I would have answered the question for the session by saying both. But I am glad to hear that I think that is the consensus of the panel. We're clearly in the middle of what's another cycle, and I think that it's no surprise to sort of say that technology, the economy, business, and life in general always follows cycles. I think, however, what makes what we're going through right now a fundamental shift is very much, as Eric said, sort of the view or the window or the lens that you're taking on this cycle, how long it's lasting, and what we're looking at, what it's affecting. I think there's two reasons it's a massive, massive shift, consuming probably one or two different cycles in terms of financial services. One is very much, as Sanoke said, there's a huge cultural shift in what's happening. It's not just a technology shift, it's actually what technology is enabling or accelerating in terms of this cultural change. And I think an example of that, for example, is while obviously blockchain is innovative, it's a new technology, it's being introduced to financial services, really what I think is the big shift from that technology is the cultural change about banks even talking about decentralized registers, for example. I don't think that would have even come up 10 years ago, let alone 20, 30 years ago. And so the shift is really what technology is enabling, as well as, like was said previously, the mindset that's been changing. The other thing, obviously, at a sort of a more macro level is when we think about technology, and you can think about cycles from 1999, you can think about the bust then from 2001, 2002, and everything that ebbs and flows. The reason why this is so disruptive this time is because of how consuming it is for every sort of business facet or aspect of the world generally. I mean, it's being labeled as, by very many people, as the fourth industrial revolution. There's no question that the impact on financial services then will be a massive shift and hugely disruptive. So you take that as a sort of a larger technology change and everything that's afforded from it, marry that on top of what's happening culturally in the mindset, and I think that's why everybody here on the panel has come to the conclusion that it's a massive, massive shift. Now, I think that the reason why it's going to be so impactful for financial services, and maybe even larger than maybe the change or the shift from, say, retail bank branches to, say, online banking and what the internet did in the late 90s or early 2000s, is because this attitudinal change affects so much with financial services. We're talking about impact to transparency. We're talking about impact, with the relationship with banks. We're talking about financial inclusion, access to finance. And when you talk about all of that changing relationship, you no longer have what has been, I think, a historical view of banks and the financial services sector. It's much more holistic. It affects all of society, certainly geopolitical forces, and if you talk about transparency even in politics or in governments, most of that is traced back to sort of where the money flows. And so everything is now all wrapped up into what stems and comes from financial services and how that's affecting not only consumers, governments around the world, and generally how culture works and how people are relating to money. So then I would just sort of think about, from where I come from, how do we best leverage what's happening? So if we all acknowledge that we're in the middle of a shift, what do we do about that? And actually, that's already been alluded to previously as well by both Eric and Sanoke. But for me, and this might be very convenient, but again, with my two different roles and my two different hats on, for me, the obvious call to action is collaboration. And we have talked about this a little bit already this morning, but not only just the collaboration between startups or SMEs and existing financial services institutions. I would again echo what Eric said at the end, which is regulators, and usually that's my hook, by the way. Nobody often mentions regulators. So I think the regulatory system is also part of this collaborative conversation. So first of all, I'll just take a step back. When I talk about startups and financial services institutions, I'm finding that a lot of people, when they speak about FinTech, sort of think about FinTech as startups and then as adversarial or at least separate to banks or financial services institutions. Certainly from my point of view as a private investor, but also from a treasury perspective, that's not actually the case, and the two are not mutually exclusive. I think it's the financial services industry, largely, for example, SWIFT, as one use case, which has always led in terms of technology adoption. You look at a faster payments network, you look at IBAN, you look at BIC, and you look at all of the technologies that have been employed for moving, for transferring, for investing, and for working with money. Financial services has always been in the forefront. And so FinTech, while it's a new sort of term, certainly not a new condition or a new happening or occurrence in this industry. And I think that has to continue, that sort of collaboration. What makes it really disruptive right now, or this shift, is where the innovation might be coming from, or where the cycle is coming from. And I think what we're seeing is that a lot of it, not all of it, by the way, but a lot of it is coming from outside of existing financial services institutions. But in order for it to be successful and widely adopted, it's got to be in conjunction with those banks. So you think about FinTech startups, they do their final settlement, they do reconciliation, they'd actually do the kind of last mile of any transaction through a bank. The two are not mutually exclusive, they can't be in isolation, and the more that there's collaboration, the better then the result for consumers, as Eric was alluding to. And then finally, I have to put in a kick then for the regulators. I think around the world, as Eric was saying, most of the regulators are in place, surely to protect consumers, but also, as was being said, to sort of protect an existing industry. In the UK, we have a unique position because the regulators in the UK actually have a mandate to encourage innovation and foster competition, which some would say in different regimes or different countries is actually contradictory to what they would do as a regulator. But we have seen in the UK that this is hugely, hugely useful as an accelerant, and obviously something that has helped create, what's a bit of a FinTech cluster, if not sort of a leading hub around the world for innovation in financial services. So that's all I had prepared to say, because so much has been said by my esteemed fellow panelists, but I really look forward to then the continued discussion in any Q&A.
Thank you, Eileen. Thank you all. Can I ask you to step back up to the podium, because it's time for us to have a few questions. I mean, you've covered just about everything. It's left me with not very much to ask as well. I've been looking through my notes, but one of the things you all did talk about was a cultural change, and I think that is quite a significant move. Sanoka, I'm going to start with you, because you mentioned it's also an organizational change, the culture there. How challenging would it be for a large organization, one such as JP Morgan? What are some of the things you guys have done to sort of accelerate, if I may say, that change?
Yes, Stephen, this is one of the biggest things we talk about in management meetings, and something that we spend a lot of time and effort now on. I'll give you an anecdote. Just yesterday, somebody who runs training for us inside came to just put forth a proposal to me, which was quite interesting, just that it came from the training person, which was to say, how about rolling out a new program, which is to really target it at product managers and sales teams, that's really around teaching them how to ask for good technology. Right? Which is quite intriguing, because I thought that's fascinating, because I think that's spot on, number one, because you get the technology you deserve, right, usually, and knowing what to ask for and knowing how to work with technology teams to develop solutions is in itself, I think, probably one of the biggest changes one could aspire for. I mean, Eric, it might be music to your ears, but I said, yes, let's do it, because a lot of the times we find business teams that don't have sufficient knowledge of what they're asking for usually go down rabbit holes. There's a lot of time that's wasted, and ultimately all that suffers is the client experience. Right? So that's just an illustration to tell you the types of challenges that we have to deal with in a large organization. What we're going about doing is we're trying to approach it with like 2 or 3 ways. One, increase awareness, right? Just expose as much of the business, as much of the operating model to the external world. So we have innovation laboratories, we have workshops with cross-functional teams. So there's a lot of facilitating mechanisms to drive that cultural change, number one. Second, you really force people to put their money where their mouth is. So when we make investments in startups, or we are engaging with a startup in our what we call in residence, which is our incubator to bring in startups and work with us, it's always on the respective business's balance sheet, or on, they have to pony up the money and the time and the people required to actually work on this. So it's not some sort of thing that you do in a corner and it's easy to always have a free option on, but you force people to actually put the money where their mouth is. So these are a couple of mechanisms, just subtle, but when applied at large scale, they do end up making a significant cultural change, and we're beginning to see the early fruits of this.
Maybe to add to what you said, two points on my side. First, just from our profession, we cannot imagine today any transformation project with a customer without including management of change in it. So really to transform, for example, to cloudify, to use this awful word, an environment, an IT and so on, management of change is a key element of it. The second point I would like to add is, what is striking me the most at the moment is we're not talking about cultural change. we are talking about emergence and addition of people who have a different culture. And because, again, the instant we are talking about is that today, a guy who is 30 years old and who start working, okay, anyway, is coming with a totally different culture related to what we are talking about, digitalization and so on. And so back to the point where one of our key challenge as employers, our support to our customers, is to manage this shift by the fact that there are a lot of people who will not transform. There are a lot of people new with totally new demands, and that we need to manage that and to take advantage from that. And that we need to inject a lot of Gen Y people in organization where we used to say, you need experience here. You need to have gone through all the difficulties. No, 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 no. You don't need that. You need to come with a Gen Y mindset. And I just finish on that. I've been in telecommunication, mobile telecommunication. The only way to understand what was going on, at least for me, was to look at the behavior of my kids. That's the way I was looking. And then I've kids, 3 kids on 8 years time frame. The behavior of the oldest one and the behavior of the youngest one is totally different, okay? And it will go on being totally different when they work. And so back to the point, I think it's mainly to manage these different cultures together, to take the best for it. And, but again, it's not a cultural change. It's an addition of totally different cultures.
That is a big challenge. I mean, I'm going to pose that to you, Eileen, this next question, because I like the way Sanoke asked, do we know what to ask for? That's the question. Do we know what is the end goal? Do we understand the entire chain of our customers, from those who don't want to change and those who do want to change? And how do we then have that conversation with fintechs, with startups, and say, let's all get on the same ecosystem, not work in isolation, get the conversation going so that we can then achieve the same end goal? Eileen, your thoughts on that?
No, I think that's a great question, because I was thinking about it when we're discussing sort of cultural change. I think, let's be realistic, right? Anyone who's in an existing industry or in an existing context, whether it's financial services or otherwise, never likes cultural change. It's not a good thing for anyone who's the incumbent or already resident within some kind of context. Whether, again, I was talking about politics earlier, and nobody actually likes cultural change. It is usually forced. There is something external to this context that forces cultural change. And so I think the most important thing is for one to recognize that it's happening, otherwise they risk obsolescence, and that's what drives cultural change. I think to now this sort of more specific question about how everyone gets on the same context, though, or understands what the goal is. The only thing I can say is, again, from the point of both regulator, but also somebody working with new companies and startups and people that are, where they're comprised of younger people, it is sort of consumer-centric, isn't it? And I think when I talk about things like transparency, financial access, inclusion, and all of the sort of access that people want, whether it's through a user interface or real-time information, or intelligent big data and insights and all that, it is just what does the consumer want, as opposed to what does the institution believe that it should offer. It is literally what a consumer would want. And I think people who have grown up with phones and basically the computing power of a supercomputer when we were all studying at their fingertips, they're demanding access to everything about their own finances, because that is what they own, and so they want that ownership. And that's the sort of larger goal, and everything we can do to take incremental steps towards that is a good thing.
So it's a big challenge, because the landscape is constantly changing, evolving, almost in real time. And can technology keep up with that? And maybe it can, but can the institutions then embrace that technology fast enough to react to the changes that are on the ground? Sanoke.
Well, I was going to say that's probably the much bigger challenge for us, right? I think changing people's mindsets is one thing. I think changing 30 years of technology that's in the ground, right? I mean, is another thing. And that's the constant struggle that I think someone like me in my job deals with every day, right? So you do have to be able to prioritize what's the current state, because guess what? We process $5 trillion a day, and we don't want that to not get processed, right? So you can't take your eye off the current ball in terms of what you're doing. I think what it really forces, though, on us is a harder prioritization of what really matters in the current, and setting aside enough bandwidth, both in terms of intellectual bandwidth and real bandwidth of people being able to be deployed against some of these new priorities. And this does pose a challenge. I think not everybody will be able to cope in doing both, but I do think this is going to become a fundamental capability that the banks and the institutions and the large corporations that are able to get that right are going to just stand out significantly in upcoming years. So we think of it as a really big priority, and we're just putting a lot of management time, attention, and effort behind it.
I think put another way, they have to. And another point I would make is, let's be clear, I mentioned I don't think FinTech companies should be adversarial with banks or vice versa in financial services institutions. If, to your question, Stephen, financial services institutions can't adapt quickly enough, they will risk obsolescence, and the threat is not from FinTech startups, it's from the likes of WeChat or Alibaba or Amazon or Facebook. And so they have to, otherwise they're competing with technology players who start to figure out how to deal with finances, and instead of being the other way around.
Absolutely.
Just maybe to add to that on the point, and again, I like to be in the middle of these two persons, maybe as a kind of link of trust or reinforced trust, because here is a world we are working a lot on, because we are strong innovators. And here it's a world we are looking, because of course we are selling a lot of IT to the banks. And just one point related to that and to answer that. For example, I personally consider, and in a lot of the engagement we have with our customers, is to convince them that they need to go with aggregating solutions, which are the more standard IT solutions and so on, and also fantastic new innovative solutions coming from all these startups and so on. When you are in telco, people are innovative, technology innovative that looks a little rational and normal for them. In the world we are in, FSI, banking, insurance even more, it's a very difficult point. And for me, and it goes on being a key recommendation to our customers to say, by the way, at the end, first you need to be back to what's your purpose? What's your business purpose? And again, I don't come back on Uber, but what is a purpose at the end? And then what is that? And then to address the challenge, one way also is really to be sure that we aggregate from an approach point of view, from a solution point of view, from a skills point of view, and the competencies coming in this case from these two worlds. And really to go for that, and to say to the people who say, you imagine, is their solution secure? Do they know this? Do they know the regulation 1 point, and so on? I've known that in telco, is to say, guys, that's the old way. Now the point is to take full advantage from all that, because we need to be fast, we need to grow, and so on and so on. And that's the way, personally, I would address it.
But of course, there are risks with that as well, and it means, sort of you're jumping on. Sometimes you're having to jump on very quickly, not perhaps fully understanding what is happening out there. Eric, I'll come back to you because you mentioned disruptive technologies earlier. How disruptive are they? Or perhaps they could be good in a way because they're forcing institutions to look outside to say, I have to change. If I don't, then, as you all mentioned, I'll be obsolete.
Well, two or three things related to that at the end. What is disruptive? Because as we're saying, any technology is on its own cycle. Personally, what I consider disruptive, what has been disruptive is really the evolution, incredible evolution of communication, telecommunication. And so the fact that clearly the instant is a reality because of the telecommunication, bandwidth, speed, and so on and so on. But then the real disruption is to bring a certain model and a certain approach from one domain to another domain. The disruption comes from the fact that such an industry will start totally shifting towards digitization, toward the point of view of the consumer, and so on and so on. And that is what is disruptive at the moment. And then with all the points which we are talking about, consumer-focused, I would say real added value to the consumer-focused and things like that. And then to finish on your point, and then the most disruptive thing is this software-defined, the fact that computing can be everywhere. So it means that everywhere, with the technologies which do exist today, you can have a brain, a human being. We have a brain, we know how to compute, to acquire data, and so on. But we can have billions of machines who can do the same, because they can compute, they can acquire data, they know the results of data analytics and things like that, and so they can produce a very specific intelligence, very close to a customer, very close to an enterprise, and so on. So that's what is disruptive, and the technologies are here. It's clear, the technologies are here.
Yeah, I might add just a couple of points to that. I think one of the things that to get the real benefits, as I mentioned earlier in the case of the distributed ledger as an example, but it's generically true, is to be able to leverage each other. The whole concept of borrowing from other industries, the concept of open sourcing software open sourcing APIs, etc. I think that's a new concept for finance. And I think I have to say everybody's embracing it wholeheartedly. It's a game changer because it just changes the equation of where things are being built from being inside your four walls to potentially anywhere. Right? So that's a big disruption. It's a meta-level disruption because it's not specific to a specific technology or changing a specific process, but it's changing everything about the way we do things. Right? So that's really worth pausing on and saying, are there other similar processes or other similar practices from other industries that we could be borrowing from? This one certainly, I think, has been now well understood and is well on its way to making a huge difference.
Eileen, would you like to add to that? Or?
No, I mean, I couldn't agree more. Risk of going last.
I just know as a consumer, I like disruptive technology. It usually makes things cheaper. Not always good for everyone. But folks, we could have this discussion further, but we are running out of time. So what we're going to do is, again, we've mentioned we had the vote earlier. So again, once again, folks, get you to pick up your panel here. And let's see how you feel now about our question. Are we in the midst of a fundamental technology shift, or is this merely another technology cycle, a shift or a cycle? What are your thoughts on that? I'll give you just 10 seconds to vote, and time starts now. All right, let's see. This is what we had at the start of the session.
We start again.
And let's see what you have now given us. Oh, this is now, pardon me, I got thrown off by the colors. Oh, there you go. The green was the first vote, and the purple was the second vote. So I think you guys have done a great job. You've reinforced what everyone was thinking and convinced some who are on the other side. Well, as we wrap up the session, I just have one last question for each of you. What do you think will have the biggest impact on the way we do business today by the year 2020? Sanok.
So I wanted to start off by saying the cloud will make a huge difference to us from a technology perspective. But I think just keeping with the theme of our conversation here, I have to say the biggest change is going to be the cultural change that is going to happen across inside enterprises and between enterprises and other large corporations and startups and the community. So the biggest change is going to be the cultural change.
Eric?
Again, 2020 is very close. It's 4 years. And so I think, as I said, first thing, the compute everywhere is an essential point, because, again, it allows to go to all the processes we are talking about, distributed ledgers and so on. And then the second point, I really think that, back to what I said, deregulation or regulation on the real purpose, and its evolution will be a key transformation element for the next 4 years.
Eileen.
No, again, at the risk of being completely lame, I agree with the last point, because I think now technology, in terms of the cycles we're talking about, is at a relatively steady state, in that it continues to accelerate, and there's momentum, and there's impact from technology. But I think what will change things are the cultural shifts and how people's expectations are changing, and also how financial services institutions think about delivering to those expectations. And then that encompasses what's happening at the regulatory side. So hopefully more regulators will take the lead of the UK regulators and think about increasing innovation and competition, and not simply about protecting incumbent industries. And that also in the changing sort of geopolitical landscape, obviously I'm very sensitized to things like Brexit, you'll have more things like FinTech bridges and the need for regulatory regimes to work together. And I think that's really going to affect how services are delivered.
Thank you all. Ladies and gentlemen, please join me in thanking our guests this morning, our guest speakers who have shared their thoughts with us on this issue.
Thank you.
Thank you all. Thank you all.
Yeah.